Hello, everyone. Welcome to our PAC webinar today. Thank you for being with us. My name is Rocío. I'm an account manager here at PAC, and I'll be hosting you today. The topic of the day is the software and IT services market trends and predictions for 2025. We are having 3 speakers with us. The first one is our Chief Analyst Officer, Christophe Châlons, who's going to give us an overview of the market trends for software and IT services in Europe. Also, he's going to talk about some key trends and insights. After him, we have 2 of our PAC senior analysts, Nick Mays and Spencer Izard, who are going to talk about some of our predictions for next year. So, before we start, first, I would like to share with you some technical information. The session is being recorded, so all of you are on mute. If you have any question, please, you can use the Q&A section at the bottom of your screen, and then we can follow up after. Also, at the end of the session, we are going to share with you the slide deck and the recordings. So let's start. I'm going to hand over to my colleague, Christophe. Hi, Christophe.
Thank you, Rocío. So, yes, my aim today is to give you an overview of where the market stands today. So we worked on our market scenario in the last weeks, and we are rolling out some scenario on our city portal. Maybe first comment, the figures, the scenarios that I will present today does not reflect the 2 major events of the last 2 days. So neither the Trump election nor the collapse of the German government. So for sure, there will be some negative impact, especially in Europe, especially in Germany. We will have to work on this in the coming weeks. It's a little bit too early to know exactly what will happen and what will be the impact, but there will be for sure some impact. So if we start looking at the market development, looking at the major countries or first of all, the major regions. So Europe, approximately 275 billion euros IT services market in 2024. So when we look at the growth, clearly far below what it was 2 years ago. And if we have a closer look, maybe at the major countries, so the top 3 countries in Europe are the UK, Germany, and France. Looking at the UK, it was the slowest market in 23. Let's say the first to be impacted by the market slowdown in Europe. And it was still under pressure in the first half of 24. However, it's also the first of the bigger market to recover in the second half of this year. Germany, by comparison, was the most resilient market in 23. So UK was growing 3% in 23, Germany 5.5, so quite nearly twice as fast. It was the most resilient in the first half of 24. And originally we were expecting some recovery in H2. But there are now big uncertainties on the emerging on the German market, especially or reinforced with the 2 announcements we mentioned before. France was quite resilient in 23, but it was suffering the most in the most suffering market in H1 24, even in the third quarter, and we expect here a slow recovery in 25. Some smaller market, by comparison, like the Benelux market, were quite resilient. Italy and Spain were growing over proportionally in Europe, especially Spain, growing 6% over the last 3 years. Nordics rather suffering, excepted Norway. The second area here you see is MEA, Middle East and Africa, which is at the end mainly Middle East, and within Middle East mainly Saudi Arabia and UAE. So Middle East is roughly 2/3 of the MEA market. MEA doing quite well. Then North America, 430 billion euro market, and it's 95% the US, 5% Canada. North America, you see here really the very strong slowdown of growth that we had in 23. It was the first market to collapse, we could say, and there was even a decrease of the market in quite a few industries. So the market was growing in public, but decreasing in finance, in telecom, in retail. We saw already some recovery taking place in North America, accelerating a bit along the year. And we expect even better Q4 and especially a further acceleration next year. LATAM doing okay. LATAM by comparison is a rather small market, 30 billion euro overall, so similar size as Middle East and Africa. And when we look at APAC, so APAC we have a 205 billion euro market, and here quite different countries with different pace. If we look at Australia, it was more like the US or the UK, so very strong slowdown in at the second half of 23 and further in the first half of 24, but among the first to recover in the second half of this year. China quite weak in 23, but accelerating very fast in 24. Now there will be probably a bit of slowdown because of the American elections. India doing quite well, growing 2-digit in 23, 24, 25. Japan, the strongest market among the mature markets. So if you compare Japan with Western Europe or with the US, growing nearly 7% this year and still over 5% next year. So overall, this brings to this aggregated growth for the world market. And again, we will have to adjust the scenario. Probably we can expect a bit of a stronger acceleration in the US and certainly lower growth in Europe because of the latest announcement. If I move to the usual trend, the main segment of the market and how do they develop. So when we look at the 7 major areas on the market, with a worldwide view in this case, so digital customer engagement, it's a nearly 95 billion euro market at worldwide level. Growing this year between 3 and 4%. We saw a major slowdown of this market in 23 and further in 24. So you see here the development in 24. However, we expect this market to accelerate next year, around 5%. So here, some new developments around AI, Gen AI, personalization, these kind of things. AI, Gen AI applied to digital customer engagement. It's also an area which was really very strongly growing in 21-22. Then we had 2 years of a major slowdown, and now we expect this recovery. Back office and ERP, so it's nearly 300 billion euro market, growing this year around 3%. Next year we expect it back to not far from 5. And within this market we have one huge single segment, which is SAP. SAP represents not far from 30% of the overall back office and ERP market, and this market is growing by 9%, quite stable, so a bit faster than last year, and we expect a similar growth next year. By comparison to the rest of the market, so more around custom software, back office processes for banks, for retail, telcos, and so on, also in public sector. So here, this is a market we suffered a lot. So overall, the rest of the market, excluding SAP, was only growing by less than 1% this year. We expect it back to 3 next year, with industries like banking and retail still suffering, telecom suffering. We expect next year an acceleration in areas like banking and retail, and public to remain quite resilient, quite strong. OT, industrial IT. So here we have everything around the smart products, smart processors. So it's nearly 150 billion euro market, for the first time growing growing below 5% this year. So it used to be a strong market. There is still a lot of things to do around the OT, IT/OT integration, using new technologies like cloud and AI analytics to make products smarter, to make industrial processes more efficient. But because of the manufacturing situation in many countries, there was a major slowdown of this market this year, and we expect a further slowdown next year, especially in Europe, while we see some acceleration in America, and APAC remain quite strong. Cloud. So here we look just at the hyperscaler related opportunity, not around the private cloud. We talk here around about a market of around 150 billion euro, growing roughly 15% this year. So this is by far less than the years before. Let's say the 23 and 24, we see a trend towards consolidation, towards FinOps, cloud control of consumption, more than new products or new projects. But we see already in North America the new wave starting, and we expect this new wave to start also in Europe next year, around new migration projects, but also new cloud native developments. Analytics and AI, roughly 100 billion euro market, growing around 12% this year, roughly the same for next year. And here we have, let's say, three major areas. The bigger one, BI and big data. This is growing single digit, but it's boosted by the growth from AI. Then we have the traditional AI, roughly growing at 20%, and then we have the Gen AI, still multiplicating by 4 this year, and next year probably by 2, but from a very small volume. Down here we look at the security market, so nearly 100 billion euro opportunity in 24, growing approximately 10% this year, a bit faster next year because of new regulation. Finally, sustainability. It's a very small market, below 20 billion, growing quite fast. So still this year around 30%. We expect similar growth next year with some impact of new regulation. But on the other hand, we see also a lower pressure from governments, and this is also what we expect next year, especially in the US, because of the new government. So this gives you an short overview on the market situation. And now I will give the mic to Nick and Spencer, who will present our predictions for 2025. So what are the new topics and the most interesting topics for the coming year?
Thank you, Christophe. So hi. Well, firstly, on the topic of making predictions, I think the disparity between the pre-election polls in the US versus the actual outcome this week certainly emphasizes how easy it is to make the wrong call. What I would say is, in terms of what you get from PAC, our predictions are always very much grounded in what we expect based on our regular CXO sentiment analysis, our research into where deals are being signed today, and where we think those deals are likely to lead further down the path in the coming months. Now, if you take a look at our latest figures across the SITC research program, so Christophe's already touched on some of the growth forecasts, but I think you can see on this slide that there are a number of new landmark numbers that we're going to hit in 2025 due to the development of certain market segments. So next year, for example, IT services spending in the global public IT services sector is going to surpass 250 billion euros. And we see no slowdown in the pace of digital transformation in this sector as organizations lean harder and harder on technology to support their cost efficiency programs. Staying at a global level, we expect spending on infrastructure as a service, so IaaS, to cross the 150 billion euro threshold this year. And cyber-related services, so not including the software piece, that's going to surpass 100 billion euros in 2025. And we'll talk shortly about both of these areas in greater depth. And fourthly, the SAP services market. This is an area where we've just undertaken a major piece of buy-side research that's closing in on the 100 billion euro mark as well. and again, we'll take a closer look at that shortly. From a regional perspective, Christophe already mentioned, how strong a market Spain has been, and we certainly expect Spain to be the standout market for growth in 2025 versus the other major European economies. And we're also continuing to keep a very close watch on the soaring potential in the Middle East, where spending on software and IT services is going to surpass 40 billion euros next year. So let's move on to the predictions. And Spencer, perhaps if you can start us off with the first one. Thank you.
Thanks, Nick. Yeah, so our first prediction for 2025 is that generative AI will start to have, frankly, organization-wide impact. What we've seen in the last couple of years is a lot of hype and a lot of interest, but a lot of organizations have had trouble translating that through to what they feel confident as being a practical deployment. So by the end of 2025, we'll see that we predict that generative AI will become a core tool for enterprise operations, transforming processes, and of course, the areas around customer experience. This widespread adoption has been seen in also our survey data this year with leaders across Europe, well, at least 39% of leaders across Europe recognizing that this is an area they need to prioritize going forwards. And so they're increasing their investments to deploy generative AI across areas from marketing creation. Obviously, software development is one of the sort of key areas because that's a good contained area, and also more integral business processes and operating models and enhancing how they are making decision flows. So as I mentioned here as well, is that generative AI will also play a key role in decision making, but through the use of leveraging synthetic data as well as an organization's actually generated practical data and insights. This positions organizations to have more of a competitive advantage with more agile and secure workflows. So we see this as next year will be the year when organizations start to really have adopted responsible AI, explainable AI, all the underpinning foundational elements that really give them the confidence along the lines with the use cases and return on investment to start investing more seriously. The caution so far has been, frankly, because there's been a few areas of concern around explainability and bias and elements like that. So with that, I'll hand back to Nick for the next prediction.
Thanks, Spencer. So the next prediction that we have is that the integration between IT and OT, or operational technology, will reach a tipping point in 2025. We've had almost 15 years, maybe 20 years of organizations looking to harness the potential of data that are stored in SCADA systems, production systems, through investment in things like sensor connectivity and Internet of Things initiatives. But I would argue that beyond some point solution initiatives, the returns have been relatively limited to date. Now, we strongly believe this is going to change from next year onwards. We're starting to see companies, particularly in sectors such as manufacturing, make some real progress in unifying their data management in order to break down some of those historical silos that have existed between the IT/OT sides. And they're doing this by implementing, the right data catalogs, the right governance frameworks. And I think you're going to start to hear an awful lot of clients talk about industrial data platforms from next year. And we're starting to see a growing number of partnerships between prominent OT data platform vendors, people like Aviva or Rockwell, are starting to align with companies such as Cognite and Databricks, really to try and unlock the big existing OT data silos that are out there. And what are the drivers behind this? So, of course, a lot of companies want to put the right building blocks in place to try and harness the potential of AI. But I think the bigger picture here is the pressure on manufacturers, particularly in Europe and certainly Germany, with back to what Christophe was talking about, to transform their operations to drive efficiency and competitiveness. This pressure has become so strong that breaking down these silos has become a strategic imperative. And you can look beyond manufacturing as well. If you take the multi-billion Euro asset modernization programs that are playing out in the energy and utility sectors or transport sectors, their success is very much going to depend upon how data is effectively captured and converted into real actionable insight. So, Spencer, back to you for the next one.
Thank you, Nick. So this one's really focused on a prediction around cloud services operating models. So, I'm sure we've all on this call been around the phrase of shadow IT for the last decade, if not longer. We definitely predict that starting next year and frankly the years going after, that the risk of shadow AI is going to, from a cloud services perspective, potentially increase quite rapidly. A lot of organizations, I was mentioning with the last prediction, are starting to become comfortable with how to go about integrating deep learning type AI into their organizations. But of course, there's going to be a tipping point where the consumption of these AI services through the cloud becomes such a degree of comfort and easiness that there's that worry around creep around shadow AI from cloud services into organizations. So this unregulated AI use, of course, can drive up costs, reduce transparency, and also present security risks if left unchecked. And we predict that FinOps will evolve from its sort of current level, and it's already growing quite rapidly for managing quite a wide variety of IT-related services, but it will become an integral part of helping to better manage the shadow AI conversation as organizations get their heads around token and character costs around AI models and the complexities around that. So we predict that organizations are going to need to set clear guidelines and offer employee training to manage this as well. It's not just a technology challenge, it's really a use case and a usage challenge. To use obviously the AI responsibly and preventing unsanctioned applications that could introduce risks. For us, the most important thing that we predict is going to need to happen is the need for establishing AI landing zones. So areas that are control the use of AI, ensuring security and compliance, and reducing cost, but also not stymieing creativity or the value you can get out of AI, which is going to be quite a tricky balance. With that, I'll hand back to Nick for the next prediction.
Thanks, Spencer. And this, I guess, relates to the cloud services piece in what you were talking about. And the next prediction is that we believe that we're going to hit some real major bottlenecks in the data center expansion gold rush that's playing out, not just in Europe but worldwide. The cloud services landscape continues to expand and become increasingly diverse. Particularly here in Europe, with the rise to prominence of sovereign cloud providers, certainly in markets like France and Germany. And while we are seeing some client organizations repatriate some of their cloud workloads back to their on-premise sites, the major hyperscalers continue to expand as appetite for AI-related services in particular continues to ramp up. Now, the funding for new data center development is not a problem. So if we look back just at the last 3 months alone, in the weekly newsletter that we produce, we've tracked over 30 billion euros of new investment being committed to Europe alone for new data center site developments. So that's funding's not the issue. What is the challenge is the access to scalable, renewable energy resources and the pressure on local and national energy grids. This is already causing friction, and this will very much be exacerbated in 2025 and beyond. In the UK, we've already gone through this interesting moment where data centers are now being considered as part of critical national infrastructure. But I think the question that some territories like the Netherlands are starting to weigh up, for example, is, well, does that mean that data centers should have priority access to the energy grid over, say, hospitals, for example? So there's some big questions to answer. So we think that data center operators are going to have to get more creative in 2025 and beyond, and think beyond the kind of traditional hubs that they've tended to use. So locations such as Frankfurt or the two big hubs in the Benelux region, for example. And they need to become more imaginative on power sources. And we're starting to hear early noises around how can nuclear be harnessed as a power source for future build outs in order to keep pace with customer demand. So Spencer, back to you.
Thanks, Nick. So our next prediction, be surprised it mentions AI, but this reason being is because it threads through absolutely everything in the conversations that we have and how we see the market's demands for the next year to 2 years. And one of the challenges, and Nick brought up one of the couple of companies earlier, Databricks being one of them. One of the challenges that organizations have is around AI-powered data preparation, and we see this will become we predict this will become a big game changer in from 2025 onwards. So for example, the big focus around the likes of the data lake houses of your Snowflakes and your Databricks has been, frankly, because organizations have needed to get their arms around their massive data estates. But the levels of consumption of data and insight that deep learning models will need over the coming years means that accelerated data preparation with the support of AI is going to be essential. Now, some of these platforms themselves, like Databricks and Snowflake, are already evolving to this direction. So they're good technologies to help in this direction. We see that AI data-driven preparation, so streamlining of data cleaning, labeling, enrichment, and is easing one of the most resource-intensive steps of AI deployment. So that tidying effort. We also predict that the use of deep learning models like generative and agentic AI to generate synthetic data to complement and further support existing data and improve data quality in real time will become a big factor and a big change in 2025 onwards, in making it possible to train AI models faster and more effectively than organizations currently have the capability right now. This type of approach will provide enhanced agility and cost savings, reducing implementation times, and we predict it will empower organizations to drive more actionable insights as well. So this will be a big thing from 2025 onwards, and it's worth service providers partnering as hard as they can with end users to support in this. And with that, I'd like to hand back to Nick for the next prediction.
Thank you. So the next prediction that we have is that cyber resilience is going to become the #1 priority for organizations in 2025. And you might well think, well, of course, but everyone's been saying that for years. It always comes out at the top of the list when when organizations do CXO studies as the thing that keeps them awake at night. But what we think is the big difference from next year onwards is that this concern will be backed up by real investment in skills, in processes, and technology across all industry sectors to make their defenses against what's an escalating and increasingly sophisticated threat landscape as robust as possible. So what are the drivers here? So certainly the increasingly public impact of breaches, be they ransomware attacks, denial of service attacks, that are affecting organizations across all industries is a huge driver. And banks and retailers have long been the target for these attacks. But what we're increasingly seeing is those companies in sectors such as local government, education, utilities, they're now having to make step changes in their approach to cyber resilience because the threat is all too real that they face. Also, for small and mid-size organizations, particularly those companies that are suppliers into larger businesses, they're also very much in the crosshairs now. And as was evident in a number of hugely disruptive breaches caused by the outages of some of the key software platforms used by healthcare providers in recent months. And of course, there are also new legal requirements on the horizon, such as NIS2, CRA, and DORA here within the European Union, which will be introduced at the start of 2025. All of these are forcing companies to develop robust resilience strategies to better protect themselves going forwards. And Spencer, I think you're going to stay on the cyber theme for the next one as well.
I am indeed. So thank you for that good lead in. I would say, look, we predict that cyber asset attack surface management, or shortened down on here as CASM, will over the next actually 3 years become a very important part of the conversation that Nick was just talking about. Now, whilst CASM, and I'll apologize, I'll keep referring to that, otherwise it'll take too long to do this prediction. So whilst chasm is a term that has been sort of popularized in the last few years, we've not seen any significant adoption in organizations yet. What we've seen from a security posture perspective, much like what Nick discussed, is security technologies focused at types of attacks and types of threat landscape issues. Now, the reason why chasm we predict will grow is because it provides a centralized view of an organization's digital assets and enhances security by tracking and managing vulnerabilities across the entire estate. So you can essentially use chasm to group either individual assets, whether that's OT or IT, or bundle a set of assets together that becomes a business application workflow or something along those lines, and then use it to have a 360 view of all the different types of attack planes that can come into that asset and constantly monitor against it. As the environments grow more complex, chasm mitigates these security gaps, adapts continuously, and that's how it's supposed to be focused on. And we definitely predict that by 2027, sort of no surprise in the conversation, but that AI-driven chasm will take an even bigger step towards these directions. And already this year, we've had briefings and conversation with Google about how they're moving into this space through the use of deep learning AI tools. So agentic style chasm type security models that enable real-time threat detection and response that improves the overall cybersecurity effectiveness and allows, like I say, that 360 view. And that's going to take some years, but we definitely predict this will be one of the next big areas to focus on. And with that, I'd like to hand back to Nick.
Thanks, Spencer. So out of the chasm and into the SAP ecosystem for the next one. So our next prediction is a big shakeup in the SAP ecosystem in 2025. And I mentioned earlier that spending on SAP related services is going to surpass 90 billion euros next year. And while, of course, there's a huge wave of ERP modernization programs playing out right now, as vendors such as SAP phase out legacy version support, there are also some interesting shifts playing out beneath the surface. Now, next year, we expect one of the more interesting ones to be the impact of the Rise with SAP proposition, which, of course, is the pathway that is strongly pushed by SAP itself to its customers and typically requires public infrastructure as a service-based deployment models for SAP S/4HANA. Now, there's a couple of issues here. Firstly, it's going to pose some very big questions for the SAP customers, the users themselves, in terms of what they do with their non-SAP application landscape, because these two landscapes are normally very closely linked. But secondly, it will also impact the SAP services partner ecosystem, because we're going to see SAP take over public cloud hosting and technical application management as part of these RISE contracts. Now, this will have a significant impact on any partner with a strong SAP hosting business. And that's going to force them to expand their service portfolios in different directions. That could either be within the SAP ecosystem, or it could be outside. And that could lead to some interesting new competitive situations for those partners, and some interesting conversations with SAP themselves over the next 12 months and beyond that as well. So Spencer, back to you for the next one.
Thank you. And this will be, I believe, my last one for the day. So we predict that starting next year, but really only sort of occurring over the next couple of years or so, that customer journeys are going to become fully automated, essentially AI-driven engagements. Now, I've been around digital customer engagement for way too longer than I want to admit in life, and the holy grail of hyper personalized marketing and content engagement and ability to adjust in real time, both in digital context and then through mobile devices in stores, has been something talked about around this industry for a very long time. However, it's really the permeation of AI into every technology platform and service that's really going to make this end-to-end customer engagement a reality. And we predict by 2027 that AI platforms will automate customer journeys from discovery to loyalty and create personalized experiences at every stage with minimal human intervention. We'll obviously still need human intervention for certain amounts of safety checks and sort of decision points, but there'll be a lot more automation going along. We predict that deep learning models like generative AI will dynamically tailor content and interactions, leading to improved conversion rates and customer loyalty throughout relevant personalized experiences. And this will lead to operational efficiency gains. And I mentioned agentic AI quite a few times today, and that will be the sort of big catchphrase we'll hear a lot more over the next couple of years in the AI space around deep learning, because we also predict that agentic AI will streamline customer engagements, reducing costs while allowing companies to quickly adapt and evolve to customer preferences and market trends in a scale and a manner they can't really do right now. So there'll be a lot less, reaction and a lot more proactive behavior in this space. So I think it's a really exciting next few years if in this market. And as Christophe says, it has good potential to grow from where it is currently. And this will be the next way and next evolution for it to occur. And with that, I'd like to say thank you, and I'll hand back to Nick.
Thank you, Spencer. So just to wrap up with our last prediction for next year, we're going to go to the topic of sustainability. And we wanted to finish on a positive spin on what is a real hot topic right now. But we believe that 2025 onwards, sustainability will no longer be just a regulatory play. Now, of course, there's been a lot of storm clouds gathering over the sustainability topic for some time now. I mean, there's been a perceived lack of progress on the topic by some major corporations. There's been growing allegations of greenwashing. And of course, a second Trump term is likely to check, at least some of the momentum in the US at a national level. I would argue, however, that the direct action taken at a state level and by many major US corporations is likely to continue at pace, regardless of the mandates that come from the White House in the coming quarters and years. Because businesses and states continue to respond to wider drivers from the investment community and to support changing, customer buying behavior and the changing needs of the ecosystems and industries in which they operate. So in terms of how this translates into investments on sustainability-related software and IT services, we think 2025 is going to be a year where investment starts to move on from the initial rush we've seen over the last couple of years to meet regulatory requirements in terms of data collection, investment in the reporting tools. It's going to move on to support much more impactful programs of work. And part of that will tie back into the IT-OT crossover that I talked about earlier in today's session, as organizations look to optimize the efficiency of their assets and their infrastructure. But on top of that, a big part of it is going to be about supporting fundamental changes in the day-to-day ways of working across businesses in all sectors. Now, that goes from manufacturing operations through to supply chain management and transformation and the running of physical buildings. We've barely scratched the surface in all of these areas, but when we look at the pipeline of planned investment for where organizations plan to go with kind of phase 2 of their digital sustainability programs, this is where real investment is starting to be challenged as they look to drive a much deeper, lasting change in the culture of their business. And with that, I will hand back to Rocio for any Q&A.
Yes, so thank you to all of you. Let's go to some questions. So first one, okay, what are some of the successful use cases in context of uses of E&AI across banking and financial services that we are observing in the UK?
Certainly. So I'll take that one if that's okay. And I see that Priyanka's asked a follow-up question. So obviously I'm about to answer less of a prediction and more about what's happening right now. So at the moment in the UK and frankly across Europe, most of the Gen AI use cases are frankly focused on retail banking, customer-facing type services, things like that, because that's one of the more easier touch points, and also where a lot of the deep learning generative AI technologies are entering into financial services is through some business application platforms that they use to do those type of engagements. And one of the other areas that I am seeing significant development, but not necessarily yet beyond proof of concepts and experimentation. That's why the prediction talked about next year being the year where it'll take off, is around risk and fraud detection type parts of the types of the banks. So risk management, automating compliance, especially around the anti-money laundering and know your customer sides of the business, just because the amount of overwhelming amount of frankly data and they have to process. Most the large banks or even medium-sized banks in the financial services sector, their teams are overwhelmed with the amount of things they have to deal with and looking at for false positives and stuff like this. So this is definitely one of the core areas of the immediate value that I see a lot of banks sort of focusing on around that side of things. I hope that answers your question. One thing I would like to actually just add is we ran a CXO survey across Europe this year for scaling AI adoption, which covered generative AI and lots of other elements as well. And we asked some very specific questions for people who are from the financial services sector about what parts of their business they're focusing on for deep learning style adoption. If you'd like to know more about that, please do reach out to Rothio, myself, or anybody else in the team, and we can talk to you about how we can work with you to share that data.
Thank you, Spencer. So let's go to the next question. So hyperscalers have won market share against IT providers with cloud adoption. Do you predict they will continue on same place for Gen AI?
Do you want me to answer that as well? Do you want me to start that? I mean, I can start it, by the way. It doesn't mean I'm going to finish it. So anybody else can jump on the call as well. So look, one thing I would say is I would temper all of us here, assuming that Azure, AWS, and Google are going to be the Gen AI houses singularly across our industry. So for certain types of compute where it's where you're requiring more bespoke creation on top of their platforms, absolutely, but all three are good candidates for deep learning, for use of deep learning. However, a good amount of deep learning is going to come into organizations through Salesforce, SAP, ServiceNow, Workday. There is a lot of business applications where technology is going to keep getting built into, making it easier to use and engage with. So I would say that yes, of course they're going to keep going at it. They already are, but it's going to be tempered by a lot of the sort of business application cloud services as well. I don't know if anybody else wants to add anything into that.
No.
Christophe, you're talking, but your mic's off.
Thank you, Spencer. So the hyperscalers are gaining market shares against the traditional outsourcers, for sure, but they are also generating a huge market for all the services industry. So migrating applications, migrating workloads, developing new application, native cloud applications. So it's yes, they are winning market shares, and some of the value chain is moving from hardware vendors and hosting providers towards the hyperscalers. But at the same time, again, they generate a huge service market. We presented that at the beginning. The service market around hyperscaler is already today in 2024 it was over 150 billion euro market hyperscaler related services.
Good. Thank you, Christophe. So we are running out of time. We have more questions, but we are going to follow up with each of you after that session. And as I mentioned before, we are also going to share the slides and the recordings. And please don't hesitate to contact us if you want to follow up in any of the topics, okay? Thank you so much and see you all soon.
Thank you, everybody.
Thank you.
Thank you. Goodbye.
Bye.